Okay, now Euro Kiwi, I'm also monitoring it, right? First up, okay, actually I wanted to use Euro Kiwi. Let me clear everything off the chart. Okay, actually I wanted to use Euro Kiwi to kind of like add in a little bit of fun and activity, you know, as we go through this kind of daily session. Okay, where I was thinking, you know, this morning when I look at Euro Kiwi and thought, why not to throw in, you know, this pair here and let you guys practice analyzing it. Okay, because all this while is me talking, it's me sharing, and you know, you might not have the opportunity to practice doing it on a blank canvas on your side. Okay, so that's where this morning I thought, okay, why don't we use Euro Kiwi as a case study and let you put in, you know, all this that we've talked about, put into practice. Okay, so let's do that. Okay, and I'll share with you that Euro Kiwi is definitely a trade, a potential trade that it can be there. Okay, according to my strategy, according to what I'm looking out for, Euro Kiwi is definitely a trade that we can be putting in the list here. Okay, but I want to use it as a good opportunity for you guys to practice it. Okay, so what's gonna happen is again, you know, I've done the work where you don't need to filter and screen all the different currency pairs or assets out there in the market. Okay, I'm giving you directly to focus on this pair here, Euro Kiwi. Okay, and of course, you know our time frames that we always work on: daily, 4 hour, 1 hour. You can even go down to 30 minutes on this. Okay, so I want you to spend, you know, some time today. Take it as a chance for you to practice. Okay, look at Euro Kiwi and then do your analysis and, you know, share. You can share with me, okay, or you can post it on a Facebook group. Okay, what you have done, and then from there, I think it's pretty fun. Where then we can, you know, look at each other analysis, give our thoughts about it. Okay, again, I want you to know there's no such thing as right or wrong. It's just an analysis, an opinion of what we are looking out for. Okay, at the end of the day, the market is always right? So just have that in mind, right? So I can be absolutely wrong also. Okay, so but just take it as we are just sharing our opinion, right? So I would strongly encourage all of you to do that. And of course, if you want to, you can also like just email me, or if you're not comfortable sharing out in the Facebook group, okay, just email me, right? I think it's more of just giving you that chance to practice. Okay, so Euro Kiwi, we'll put it there. Okay, I'll shift this up on the top of the list so we know we are working on it. Okay, so you still remember yesterday I gave you that chance to practice, right? Now, I personally feel it's very important to give you the opportunity to practice, because then, number one, you will be able to practice your analysis process. Okay, because all the time I already draw in the analysis, and then you just hear and see, right? You just listen and then you see what I'm looking at. Things might seem a little bit easy. Okay, but I always say that if you start off with a blank chart and I ask you to do the analysis from scratch, that's where you really start to learn. Okay, so that's the first thing that you probably experience. Okay, the second is more of like, I also want to give you the opportunity to have that confidence eventually. Of course, it's not going to be happening overnight, but eventually you would slowly build up that confidence to execute trade independently. Okay, now what I mean by that is that without, you know, me, without anyone, but only you, after your analysis process, you of course you need to pull the trigger, right? Because you can do a fantastic job in analyzing the market, but if you're not trading, you can't make money. Okay, so and to pull the trigger, right, to key in that order, it takes confidence. Okay, it takes a little bit of conviction to the trade as well. Okay, and it's also very different if we take trades together like that, where I share with you what I'm taking and then you reference to it. Okay, versus I'm not doing anything and you are on yourself looking to take their trade. Okay, so there's definitely a difference to it, right? For those of you who actually did that practice yesterday, you might feel a little bit on all these things here. Okay, and that's really the psychology aspect, right? Pulling the trigger also comes with the psychology aspect. And I wanted to give you that chance to really practice on that, to experience that, so that you know, okay, maybe which area that you want to focus and work on it from here. Okay, maybe some of you are very strong at analysis, but a little bit afraid of taking the trade, pulling the trigger, right? Then you'll probably be aware of like this from yesterday exercise. Maybe some of you needs to still spend a bit more time to work on the analysis because you're still not confident, like, is my analysis right? You know, is there something wrong and things like that? Then you know. Okay, so the idea is really to give you that time, the opportunity to figure out what you want to work on, okay, or what you need to work on. Okay, so over here, you know, let me bring you to some of the I would say the charts that you guys did. Okay, again, I wouldn't want to say who's wrong, who's right. There's no such thing as right or wrong in analysis, but it's more of just sharing opinions, right? So you know, I'll look through all of them. I've already looked through all of them. I'll just click in and maybe give a little bit of my perspective. Okay, so over here, you know, Euro Kiwi, if you're looking at this, you know, it's more or less exactly what I'm looking at yesterday too. Okay, when I actually wanted to give you this activity, is really looking at this potential sell. Okay, maybe the drawing of this two line here, again, you know, we don't trade the trend lines, okay, but we use the trend lines to communicate an idea. I wouldn't just put this two line here, okay, which is this two line here, okay, because on the higher time frame daily, the direction is pretty clear, right? We have this high, oops, okay, we have this high, and of course we have this developing. Okay, so on the daily, if I zoom out a little bit, you can see the momentum is down and we have this consolidation. Okay, so because from a higher time frame, okay, I already anticipate or already know the direction that I want to focus on. Okay, therefore I would use the trend line to best kind of like you know, best communicate the idea of looking of a sell. Okay, because if you draw in this, then there's a high chance when I look at the chart, I'm expecting you see a flag, you anticipate a flag for the next push up. Okay, now not wrong, but it's just more of like, for me, when I see something like that, I would expect or anticipate that you're looking at a flag. Okay, yeah. So that's just a small little opinion that when I look at the technical chart, right, that's the idea. Okay, but yeah, I think overall, you know, this flag here, of course, on the 4-hour chart, you might not see it very clear. You probably need to go down to the 1-hour time frame. Okay, but if you're looking at this from the 4-hour scale, I think that's fine too. Okay, then so pretty okay, right? So nothing much on that. Okay, so this one here is from Connects, right? So you can see daily. So daily, she actually analyzed that it's down, right? Okay, that's pretty much the same thing that I'm looking at. Then of course 4-hour, looking at the flag, okay, which is what we always want to look out for, right? Okay, and just like I mentioned about 1 hour, right? So this is exactly what we're looking out for in 1 hour. Of course, throughout the day, I think this flag here develops a little bit bigger, but the entire structure on a 1 hour time frame is still a flag, right? Later I'll show you on the chart as well. Okay, so back to Euro Kiwi. Okay, so of course, before this morning drop, okay, again, you know, before all this happened, okay, it's still a flag pattern, right? You can see over here on a 1 hour. Okay, so you still get this impulse, this sideways move. Of course, the breakout is the bottom here, right? Okay, which to add on a little bit on the analysis, okay, you can also see that this bottom of the flag, okay, coincides with this neckline, right? So you have like a few topping formation, you have this impulse push, you have this flag, and this flag here, if you're putting in an execution at the bottom of this low, it also coincides with this low, which is great, right? Because why? If this were to break out, there's a high chance it's not only breaking out from this, it's breaking out from this topping formation with the neckline. Okay, and of course, for those of you who even extend this to the left-hand side, can you see these are like crucial, right? So again, this is where different parts of a chart of a different methods of analysis can come together as well. Okay, so you have like top information, you have like maybe you see this as a triple top, this is a neckline, you have this impulse, you have this flag, then the breakout of this key structure level. Okay, yeah, so that's where I want you to be able to look at it from different things stacking up together. Okay, so yeah, okay, so pretty good. These are some of the works that you guys have done. Okay, Chris over here says breakout to downside after completion of flat. Okay, so this is on a 1 hour. You zoom out a little bit. Okay, so I think the scale you're looking is more or less like that, which is perfectly fine, right? You see me play around with the zoom in, zoom out as well. Okay, just understand more of maybe just something to remind you guys is that if you're zooming out a little bit like that, okay, where you start to see more data on the 1 hour time frame, sometimes you realize that I'll just jump to the 4 hour and look at it from this perspective, right? So you can either play around with your zoom, okay, zoom in, zoom out, or you can play around with the time frame to help you. Okay, so both works. Okay, just wanted to drop that part to kind of guide you, right? Because sometimes you might just keep zooming, trying to look at bigger things. The easier way sometimes is just go to a higher time frame. Okay, now this label here of ABC in terms of Elliott wave is not accurate. Okay, but of course I wouldn't say right or wrong, because again, you can label it wrongly and you can still make profit from trades, right? Okay, so I would just say based on the principle or based on the traditional way that Elliott wave or Elliott waivers used to label chart, we don't label it like that. Okay, let me bring you back to the chart and you know, put in the label that you've done. Okay, so you actually put ABC, right? Okay, just double check. Yep. Okay. Now, first off, we don't label a chart. First, labeling is not that straightforward, right? That's why you realize that we don't even emphasize much on labeling. Okay. Before you even label a chart, you need to first be very clear what pattern is it developing. Okay, that's why we always focus on the pattern side of things first, because to put in an ABC, it's either gonna be a flat or a flag. Okay, because you need three move, right? So it's either gonna be a flag that looks like that, so you have three wave, 1, 2, 3, which is your ABC, or it's gonna be what we call a flat structure, right? So it goes 1, 2, 3, something like that, right? It can be expanding, it can be running, it can be regular flat, but it's basically a sideways move, a correction. Okay, so in this case here, you know, based on this labeling of A, B, C, okay, it's really just within this, right? Now I wouldn't say it's wrong or right, but we wouldn't put in that label because there's nothing much we can communicate from this here. Okay, because you're really looking at just this internal tree move of this big pattern. Okay, yeah, so just wanted to highlight that. Okay, but again, you know, with this example, you can see labeling doesn't really make or break your trading, right? At the end of the day, focus on the patterns, focus on the probability of where price move. I think, you know, that's fine. Okay, so yeah, that's on the chart. Okay, by Chris. Wakin over here. Okay, have a few. So big flag forming, smaller flag. Not sure which entry price. Great. Okay. So you know, this is the part where if I give you that practice, you start to realize that, hey, now you have this question, right? Okay, so one is you're looking at, on this scale, you're looking at a little bit of retracement and you enter at that, okay? And then of course, your other chart here is a breakout, right? Okay, so I would say both are fine, okay? Both are fine, okay? So back to this, okay? At this point of time, you're either looking at, okay, at that point in time, you're either looking at, I think, you know, an entry somewhere around here or an entry at a breakout. Okay, so both are fine, right? If you realize we do have this as well, sometimes we use the Fibonacci, you know, 50% to get involved in the trade. Sometimes we look at the breakout. Okay, and then if you still recall, I shared with you guys quite in detail as well what are the pros and cons, right? What is the strength of a retracement trade? What is the strength of a breakout? And vice versa, the cons as well, the weakness of it. Okay, so there's no like which one is best, which one is better. At the end of the day, is which one suit you, right? In terms of pro and con, right? So the idea is that both of this, you take a look at it. Okay, either you look at the retracement, which is somewhere around 697, Okay, I would assume that's more like a 50% retracement trade. That's fine, right? And then your stop is on top, the target is here, your risk reward makes sense. That's fine. Okay, even of a breakout, okay, even though, right, I think this is also a very good example. You can see even though if you use a breakout, you're entering at a lower price, but your risk reward is actually more or less similar. Why? Because your risk, your stop loss is tighter. Okay, so you can see, right, risk reward 4. That one is 4.7. It's more or less the same, but you enter at a lower price. So again, don't have the impression that you need to enter at a very high or the very peak of the price to sell, then only you make a lot of money. No, right? Your risk reward at the end of the day is gonna be the big contributor as to how much profit you're gonna make out of that trade. Okay, so great. This is good. Okay, I look at Pang's chart over here. Okay, which is I would say a little bit more advanced for some of you. Okay, but it's a very, very clear and very well communicated chart. Okay, so for those of you who love to do labeling, okay, you can actually reference to his chart. Okay, of course, he shared the 4-hour first, then the daily, but usually we go from daily to 4-hour, but I think it's fine. Okay, so now if you take a look at the daily over here, he put in some labels which according to Elliott Wave, they are all valid. Okay, so that's great. Okay, so again, very clean and straightforward. Okay, so that's the idea of it, right? When we label chart, when we draw something on the chart, the intention is to communicate a message. Okay, so over here you can see this is on the daily. Okay, so from high point here, you have that 1, 2, 3, 4, 5, which is fine, right? Okay, sometimes I would just put it as this here, 1, 2, 3. I would just put it as 1. Then this is a small correction, and then this is a down move 3. Okay, so again, both are valid, right? No matter how you're gonna label it, at the end of the day, the direction is more or less the same. Okay, so and on the daily scale, this is his analysis. I expect 1, 2, 3 to the upside as well. Okay, so it's still fine, right? Even with today's drop, this chart, this analysis is still intact. Okay, yeah. So maybe I'll bring you to look at it from the daily perspective. Okay, so that is the low, and then the expectation is 1, 2, 3, right? So even with this drop here, everything is still intact. Even if this comes down all the way, this is still potentially possible as a 1, 2, 3, right? So yeah, so nothing has changed from that daily chart. Okay, now on the 4-hour chart, okay, so you can see same thing, the expectation of the down move, which is moving right now. Okay, so again, very, very clear and simple chart. This is the W. Okay, which within it you have 1, 2, 3 as well. Okay, the X move down, which is also 1, 2, 3. Okay, and then of course the 3 wave up, right? 1, 2, 3. Okay, so very, very simple charts, but with some labeling. Okay, so for those of you who love to work on your labeling, can reference to that chart there as well. Okay, so pretty much that, nothing much to comment on it. The other one I received over here from Elsa is she's using a mobile, right? So she did a screenshot. Okay, so the analysis is down. Okay, but this is, it's a little bit difficult to use mobile to do this kind of analysis because again, you realize that it's in a portrait mode, right? So your chart, you can't really look at much data and you need to squeeze it. Okay, but she kind of took in the analysis of the RSI divergence as well, which is great. Okay, so if you go back to the chart over here, okay, on a 1-hour time frame, before all this happens, okay, let's bring in the RSI. You can see as well, okay, pretty clear, which means that while price is topping off, the momentum is lagging, right? So it's again a layer of confirmation to tell you that a potential reversal is coming. Okay, it's not going to be 100%, but that gives you that kind of confirmation. Okay, so great. Okay, so a good example where, you know, some of you perhaps would like to add in layers of confirmation using different indicators. That works. Okay, yeah. So good. Okay, this trade here, right? Let me share with you. If I were to take it, of course, I wouldn't take the retracement. It would be more of like a simple breakout that would do the work. Okay, so very similar. You know, I think you can recognize this pattern here, right? That's how I would probably set up. Of course, before this, the market wasn't that high, so probably I'll stop it somewhere there when we talk about it in the morning. Okay, I didn't talk about it. I want to give you the opportunity to go through this yourself, right? But this is how I would take it. Of course, the stop is there. Okay, the target is probably going to be somewhere all the way down. Okay, so you can see 2 reference point, maybe somewhere around here, and the second one is here. Okay, so in any case, I think the risk reward is definitely going to be worthwhile. Okay, you can see that, right? And with this kind of push, it's a no-brainer. Instantly shift your stops to break even and let the trade run. Okay, so now that's the analysis process. Okay, so most of you are doing it pretty well. Okay, the part, or I think the next phase here is like, did you take the trade? Okay, just now I mentioned, right? It's one thing where we take trades together. Is another thing where you need to execute and pull the trigger yourself. Okay, so right, so this is something that you need to work on, right? If you done all your analysis but you did not take the trade yesterday, maybe you want to explore a little bit, like why, right? Was it the fear element that did not, that causes you not to take the trade? Is it the uncertain element, like you feel, is this gonna work out, is this not gonna work out? Okay, it's a little bit towards the fear element as well, right? You're afraid that you might lose this trade if you take it. You need to go and explore, right? If you didn't take the trade, you want to perhaps explore like why. Okay, because that will give you some hint as to what you want to work on. Okay, what is it? More of like the confidence factor? Is it the risk factor? Is it the analysis part where you're still not certain? Okay, and therefore you didn't pull the trigger and things like that. Okay, yeah. So different people would have different things. If you take the trade, great. Okay, and you might feel good right now. Okay, but again, I do not want you to be overly confident. That's just one trade. But I want to give you chance to really experience it from being an independent trader perspective, right? Which means you do the work on analyzing, you do the work on executing, you do the work on managing, and how you feel about it. What's the experience? Okay, so yeah, that's the part. Okay, and I didn't really expect this to go so fast. Okay, but great. Okay, so I want you to see from yesterday to today. That's how a simple trade like that can be done.